Hello, I am back. I have my tea ready. I got my granny blanket back here because my room is freaking cold. Let's have a talk. Let's spill the tea. So what happened in the last couple weeks? Oh my gosh, so crazy. You must have heard the stock market had wild swings, the Reddit investors versus the big guys, AMC Entertainment, BlackBerry, and of course, you must have heard of GameStop. Well, we're here to spill the tea. And I hope you've got your tea and your granny blanket ready because it's gonna be a wild ride. Welcome back to another episode of Money Talk with Hermy. This is your show host Herman, but everyone here calls me Hermy. If you're new to the channel, welcome to my channel. I'm just a guy that talks about personal finance and the investment world and everything along that goes intertwined with it. Before I start the video though, I want to point below the disclosure inside the description box. I'm not offering you any investment advice here. This is purely for informational and viewing purposes. I am a licensed advisor though in the real world outside off camera. But if you are seeking my services professionally, then you can reach out for me through my email. What I'm talking about today is not here to tell you what to do, basically. So before I get into the nitty-gritty detail, let's just kind of talk about what GameStop is. And GameStop is a failing retailer, I guess you can say. They haven't been doing very well in the last 5-6 years. They sell games, as its name implies. They also sell like secondhand entertainment equipment as well. So Wall Street, the big guys, have been betting against the stock, in other words, shorting it. I'll explain a bit more on what shorting means afterwards. Wall Street does this with many different other companies. It's one way of hedging against their losses, but also making money as well. So this army of like everyday people under the Reddit forum, for those of you who read or spend hours on Reddit, you'll know what I'm talking about. They're under this subgroup called Wall Street Bets, and they thought that the retailer wasn't doing as bad as Wall Street is saying it is, so they just sort of started buying up the stock. This wasn't anything in the beginning, so GameStop shares was going up because everyday people were buying it up. And then in turn, it kind of caused Wall Street and these big hedge fund managers lose millions of dollars. Millions that I don't have, basically. Then this whole thing, this whole phenomenon turned into this David versus Goliath type situation. Everyday people versus the big guys of Wall Street. And that's where we're at right now. So what does shorting a stock or short selling mean? Basically, a short seller goes to the broker and borrows a stock to sell and then waits for the stock price for that company to drop and then repurchases it at a lower price and then returns those shares now at a lower price back to the lender. So you have a short seller going to a broker and borrowing 10 shares worth $100 each of ABC company. Then this short seller sells it, so he has $1,000 in cash. He waits until the stock price of ABC company drops. In this case, it dropped to $50. Then he would repurchase it at a lower price and return the 10 shares back to the lender. And then he would pocket the difference in share value. So in other words, he pocketed $500. Here's a graphic that I found on the internet. That was a very simplified version of what short selling does. It can go into much more detail and it's very complicated. So should you, as a bystander, get into this? I think there was a lot of drama in between, a lot of tension between the common folk versus these big guys. I think a couple years back in the early 2000s maybe, or 2010s, my age is showing. there was protesters going to different financial centers around the world, namely like Wall Street, and I think in Hong Kong there was one. I was in Hong Kong at the time, so I noticed there was these massive tent cities. They were protesting against income inequality. So now there's this hashtag going on about Occupy Wall Street 2021. So it's a similar concept. It kind of went from just investing into the stock, then it kind of spread out into various different companies, and then now it's a full-on social movement. I'm not here to tell you what's right, what's wrong. I think that's for you to decide. I'm here to explain to you the financial consequences of participating in hyped up investing. You need to decide what the difference is between investing and at what point does it become gambling. As an advisor, I of course advise against gambling, when you're kind of looking at this and kind of wanting to join in from the sideline, more often than not, you're kind of coming in already when the stock price is at a high point. So if you're buying high and then once the hype is gone, the bubble will burst and you end up losing a lot of money. Similar to how the marijuana hype that happened in 2018. People kind of bought in the stock when the valuations were super high, and then now a lot of them were worth pennies. Definition of investing coming from an advisor's point of view is that you have a financial plan. You have a plan, you follow through the plan no matter if it's thick and thin, and you have a long-term horizon. If you're hearing this from your aunt or from your uncle or from a friend's friend, you're not really basing it off of anything. You've never really heard of the company or you don't really know what they do. You're just kind of buying up this company based off of what someone else said. I don't think there's anything wrong with that per se if you have paid yourself first. And if you have a little bit of money left aside that you're not really doing anything with, then by all means, like, go ahead. But you need to enter this field or this realm of investing with a plan. Say you have $100 extra and that's the maximum amount of money you are going to put in there. So you put it in there, you assume you lost it already, think that that's okay. Just because you going in with $100, no one's going to stop you from putting in more money. So you need to be mentally strong and stop yourself from doing that. Because you can end up losing a lot of money and then you can go into debt. And so what would I have done? I wouldn't have touched it, to be honest with you. I'm not a hyped up investor by any means, especially so now that I'm an advisor as well. If I'm preaching about long-term investing and having a plan, then I have to follow through with that. So in this case, like, look at the share price. It went into the year at like $10, $15, and then in a matter of weeks, it jumped up to over $300 a share. So as I mentioned earlier, like, they're a company that hasn't been doing very well with their sales, and there's just nothing that can justify and support that type of price. So this is bound to happen again in the future. It's just not sustainable. Things will come crashing down eventually. At that point, like, do you know when that will happen? No. Do I know when that's going to happen? No. No one on this planet knows when the stock market will go up or when the stock market will go down, all right? So that's why we invest for the long term and for the long run and have a plan and go in with a goal in mind. But of course, if you really, really have an itch and you have the extra money and you've already paid yourself forward, then you do you, boo. If it's gone up $50 or $10 or whatever, take the profits, take it and run. Using the short seller's example, you borrow these shares, then sells them and then wait for the stock price to fall. You know, you just can't predict when a stock will fall and when it will go up. If, for instance, at that point, which is exactly what happened, Wall Street hedge funds, the stock price of GameStop kept going up and up and up and up. So they needed to cover their losses. Now they were hoping that the stock price would fall, but instead it went up. So that's how they lost millions. And there's no ceiling on how high a stock can go. But a stock can only go to zero. You can't go further than that. So your losses can magnify and they can keep going and going and going. This isn't something that I want anyone to go through. Money is very personal. It has a lot of psychological effects on people. I'd rather you just be steady Eddie and make money by investing for the long run. So guys, that was just a quick recap of what happened with GameStop. If you found this video helpful, by all means go down there and smash that like button and click on the subscribe button, please. It helps me build this channel. I'm still trying things out and I'm still testing new things, but at least it lets YouTube know that my channel is growing. If you have something else you want to tell me, or maybe like you bought into AMC or maybe you bought into GameStop, I'd love to know if you did. Leave me a little comment down below and tell me how many millions you made, or maybe some investing lessons you've learned from losing some money, or maybe earning money. You know, whatever. I'll see you guys next time at Money Talk with Hermy. Bye bye!